Hello, my friends, and welcome to another episode of Passive Real Estate Investing. I'm your host, Marco Santarelli, and today I wanted to bring back a friend and a property provider, a multi-city builder in Florida, and someone who used to live in California but made the smart, intelligent move 20 years ago to move to Florida and really just crushed it out there. So we've had Jim on the show multiple times, and he's back today. So Jim, welcome back to the show.
Marco, thanks for having me. Always good to be back.
Well, it's great having you on. We've had some conversation before this recording about what we want to talk about, and we thought we'd focus on Florida, the market trends in Florida, what's going on in terms of real estate, investing in Florida, new construction, maybe new construction compared to newly refurbished properties, and all kinds of good stuff. So you and I don't really know what we're going to title this episode yet, but
We
we're going
always
to
come
figure.
up with some really good ahas, it seems, when you and I start brainstorming back and forth.
Yes, always, always, always. Well, good. Well, listen, let's kind of jump in. I'm not even sure where to start, but I think the most broad question I could probably ask you or bring up is about market trends. Like, what are market trends that are happening within the state of Florida? And yes, we are talking about a state, so feel free to break it down as granular as you like, city by city or market by market. But what's going on in Florida?
Yeah, Florida, again, we're the third most populous state in the country. So there are a lot of markets in Florida. But to try to give a 20,000 foot overview, is there is still a ton of population growth happening here. In fact, I saw a stat last week that 60% of all growth in the US is between Texas and Florida, just those two states,
Wow.
which is monstrous. And obviously, that's a great win to have at our back. And we're really happy about that. However, as you and I always talk about, price point is very important. It's extremely important. So you hear about, at least I have, there's two things that I've heard about that I'm sure we'll hit. And we'll hit on insurance. Oh, you can't get insurance in Florida, which has not been the case for us. And I'll explain why. But also, man, I heard things are softening or prices are too high. And I would agree with that in certain markets. And as you know, Marco, when we started doing this, gosh, we've been working together over 10 years. I didn't do refurbished homes or now new construction for the last 10 years. I didn't do those in Miami. I didn't do them in Orlando. I didn't do them in Tampa. Not that those are bad markets, but we're always about that affordability index. What is the
Hmm.
average price compared to the average family income? And those markets, with all the attention Florida got through the pandemic, they had the most growth. And now the numbers are really out of whack. So it had such a rise, and it hasn't fallen much, but we're talking a few percent. But the numbers just don't work. I mean, for the model we want to get people into solid areas, solid properties, and cash flow off the bat. That just doesn't happen unless you're putting a ridiculous amount down. So we're seeing that in those bigger markets, and we're very glad as a builder we never went there to build. The land was too expensive, the numbers didn't work. But the second tier markets, we're still seeing quite a buzz, quite a push for needed inventory, for needed building projects. Like you and I met a few months ago in Jacksonville for a coffee. Jacksonville, we're still seeing. We just did a deal with the military base there, where have a waiting list for housing. So they're actually doing a joint venture with us to guarantee rents for a number of their new cadets coming in, both in a lot of our duplexes and quads here. So those types of things in the second tier markets are continuing to happen. And I think we're going to continue to see growth in these second tier markets from what I've seen. And I'll talk about the backing of where we get this from with our Japanese partner in these second tier markets. Again, so it's not what you necessarily heard there with Miami, Tampa, Florida. I mean, Miami, Tampa, Orlando, but these second tier markets.
The problem with the what we'll call first tier markets, the larger markets like Miami, Tampa, and whatnot, is price appreciation has been so large and rapid for a number of years that it outpaced and outstripped the rental growth.
Yeah.
So when you measure things in terms of rent to price or rent to value ratios, it just got lower and lower and lower. It started to become more like California, where it's so low that you really can't generate a good cap rate or a cash on cash return or even a fair cash flow without putting down a larger down payment, which then doesn't make sense from an investment perspective because you can take that same investment capital and apply it to uh, more profitable properties, or more properties for that matter, because you have more capital to invest as down payments on more rental property.
Exactly.
So, and that's a challenge with, San Francisco, New York, and all these other markets. They're just overpriced. The affordability is too low, and it doesn't make sense financially from an investment perspective.
Yeah. And we've seen that, me being a former Californian, and I know you're still there, although I'm still nudging you for Florida, as you know.
Right. Yeah.
Um, but we just had a gentleman through the team. He had a townhouse in Cupertino, where Apple's headquarters is, and he was looking to sell it in exchange with us. And we had been talking to one of your counselors. I mean, he was going to be he was losing $2,600 a month on this condo. The numbers that we're looking at, he's going to be able to 1031 exchange forward into two duplexes here with us and go to a positive net of about $1,600. So you're talking, I mean, a $3,700 a month swing. That's a lot less risk to be carrying, and moving the equity forward. And that's where, look, there is a play, as you and I have always talked about, of just going for that appreciation. But then if you have to write the monthly checks while you're waiting for it, and the more of those you have, that could be a very risky play. I'd rather see people, delineate into a few properties that could still have growth, but also cash flow along the way. That's something I know you and I have always agreed on.
Yeah. Yeah. And I know you write about that. We'll talk about that in your new book later in this episode. So
Yeah.
for people who are listening in right now, stick with us to the end, because Jim has made a very generous offer for those who are listening, at least for the first, let's call it 150 people or so. Okay, so we're talking about market trends. I don't remember ever a time where Florida wasn't experiencing positive population growth, and for that matter, even positive job growth. So for as long as I can remember, Florida has always been a great state to be investing in, generally speaking. But again, you want to be more granular and be uh, um, um, location specific. So the question becomes, where are the best locations, if you want to say that, quote unquote, best locations? That can be defined differently by different people. And we often get asked, myself, my investment counselors, what are the best markets? What are the best locations to invest in the country? And we're talking about Florida here today. So I'm going to throw this question out to you. Where, in your opinion, or based on data, are the best locations in Florida to invest, whether it's new construction or otherwise?
Yeah. Again, going down from where we started, the 20,000 foot view, I don't like the big boys. I like the second tier. The second tier
Mm.
makes sense. Like, for example, Jacksonville. You and I have done properties in Jacksonville together for 14 years now. Jacksonville was always just under the radar from those other big boys that I named, and it has words that don't go together. Marco, affordable coastal city. Those don't normally go together. That's just not, and also with a diverse economy. So Jacksonville has just, it's made millionaires of many of our clients, and it continues to be affordable. So I know I showed you that stat a couple of weeks ago. We have a lot of buyers come, together through Salt Lake City, right? Salt Lake City is a pretty area, but like we talked about in the bigger tier markets here in Florida, your median price of a home there is almost 600,000 now, where the median price in Jacksonville is just under 300. It's about 298, and the rents right now between Salt Lake and Jacksonville are about the same. So when you look at that, you say, where am I going to get cash flow? Where is there more room for growth? That's what I look for. That's one of the reasons I like Jacksonville. It's an affordable coastal city. It's one of the lowest hurricane risk zones there is. There's a very diverse economy. We have the most experience here because I've been investing since I left Florida 20 years ago. I mean, California 20 years ago there. So I like that because it's been under the radar of the other big boys, but it has the same fundamentals. The other second tier areas I really like are the Ocala area and Southwest Florida. Now, when you look at different reports like the Schillinger's report, in 2021, Fort Myers, the greater Fort Myers area was the fastest growing area in the nation, both in population and job growth. That speaks volumes to me. There is a great lifestyle there. It still has an affordability index way below, if you go to the other coast of Fort Lauderdale and Miami and that. And it has a higher hurricane risk zone, but still way lower than that southeast part of Florida where it's the highest and we don't build there. So those are the kind of the three areas that we've decided to focus on. And we've put our money where our mouth is. I mean, we bought over $20 million worth of land there right going into the pandemic because we got some information on growth patterns. And those are the areas where I see that, look, it comes down to those fundamental numbers, Marco, that we always talk about. I can still get you in at a very affordable price in a good area and cash flow right off the bat. And that is absolutely key to me. And the housing needs continue to grow.
I always think about I always look at an investment in terms of tenants and tenant demand because you can buy a property virtually anywhere, but if the tenant demographics don't line up with your investment goals, then it might be a difficult or challenging investment. What can you say? Do you have any comments about tenant demand, tenant demographics? What's going on in terms of trends with tenant demand?
Tenant demand is still strong. Here's what I've seen about tenant demand. It's still strong. It is definitely not, and nor do I think we should ever expect it to be as strong as it was in 2020 and 2021. The reason why, Marco, our average days on market for a rental property to occupy was about 12 days. That was just not normal.
Yeah,
So
that's fast.
sometimes people say to me and say, "Oh, we heard tenancy is taking 3 times as long as it used to be." I said, well, that would be 45 days, which is about normal. So
Right.
we've seen, again, we've seen a slowdown in that, but still within a normal range. And so I feel really good about that. And what we know happened, I know you and I have had a few conversations with all the craziness with the commercial banks and what builders have gone through. A lot of people pulled back on starting new projects that were needed here, by, all reports showing the needed inventory we have with the growth patterns happening. They stopped on these starts of larger project, commercial, residential, other small builders because the financing was difficult, and they just stopped. So from what we're seeing, as we're going through the inventory that's coming on, there's a lot of inventory that's come on in the last 6 months that's being worked through and stabilized. But what it's looking like, because there's been so few starts to what there was supposed to be over the last year, that by the end of this year, beginning of next year, we're going to have another inventory problem, which for us investors, obviously,
Hmm.
when there's a little bit of an inventory problem, there's usually an upward pressure on price and
Hmm.
on rents in the right direction. So I can't say that's a bad thing, but I think that it's something to look for as well.
So I don't know if this is kind of out of the scope of our conversation here, but we're not going to mention any names, but you and I both know that over the last, let's say, 2 years, there's been some issues with certain builders, not many, but one or two,
Yep.
where there was contracts taken, intent to build, and land never was broken, construction never happened, or lack thereof. I don't know if it's worth talking about it all that much, but there have been, builder issues in the past. We have many clients that have many contracts on those properties or to be built properties that never, got completed. And, let's just be clear. This is not a common or widespread problem, but it does happen. So I don't know if you have any thoughts about that. We're obviously trying to help. We, as in us here at Norada, and in collaboration with you, to try and help some of these people transition out of that situation and into something that is real, that's going to be built, and something that they can actually own and rent.
Uh,
Um, do you have any thoughts or comments or
there's a
suggestions for people?
I do. It is always your right to ask for your deposit back. Always your
Hmm.
right. So I always encourage, and as you know, I've tried to personally help on some of these. It is always your right to ask for the builder to return your deposit. The contracts that I see definitely deem that um, absolute merit to ask for that back. So make sure if someone has a deposit from you from a builder, you ask for that back. That is your right, and anything else that's said is just not accurate. If they cannot build in a certain time frame, and I'd look in your contract, then there is an automatic um, demand that's available to get a refund. And if they're outside those guidelines of build time, then you can ask for that back, and I would highly recommend that. The second thing, which a lot of the times too, Marco, and again, I don't know all the situations, but I've tried to help on a few. I don't know if there's ever malintent, but there was a craziness none of us had ever seen. At least I've had people way older than me that were like my building partner's father in his 70s who had never seen something like what we went through with those material price increases and the supply shortages. And I think all that played a part. Um, but now we're through that. So there was a time where, and this is more for moving forward. There was a time where the only way, and we were included, that, we could do a new construction house for you is you put down a deposit, and it's going to take about a year to build, and that was standard. Now we're on what's called a continual build cycle. So you can put up a deposit, but your house is going to be done in 30 days, 40 days, if that's what you want. And so you don't have to have this longer risk period of that in today's times. I don't think if you're really looking to get your money moving, that you have to. And a lot of people, they put it up. How long am I going to wait? There are a few builders like us that, they can deliver product now. And obviously the risk is less. And some of these new constructions actually already have tenants in place. So you're taking a whole risk factor out. So moving forward, and obviously we work with a lot. There's the counselors at Norada will be able to touch more deeply on that. But backtracking to the few builders that didn't, you are within your legal, moral, and ethical rights to ask for your full deposit back if they have not delivered the product within a certain time frame that was in your contract, no matter what is said. And that would be the pursuit of what I would do, and that's within your right. So I think does that give some clarity and direction on that, Marco?
Yeah, and I just want to reiterate that it's not a very common problem, but it sucks when it happens.
Yes.
So, anyways, it is what it is. We've been trying to help. We don't have a lot of leverage, but we've been trying to help those people who are under contract that are trying to get their deposit back or their house started or completed. But yeah, I know you deliver, and you pointed out something that I just want to highlight. You've got properties that are in construction and or completed or near completion, the certificate of occupancy, whereas some builders don't start construction until they actually have a deposit or a contract. And so, you're in this long build cycle. It could be 6 months or more, maybe as much as a year. And so, you've got to keep in mind that if you are in that situation with new construction, you're waiting a long time to get the property. Now, granted, the value of that property could go up over the course of that 6 to 12 months. It could appreciate even though it's not completed. But that's, certainly not guaranteed. And there's the additional risks of waiting out for the builder to start and finish this property.
Yeah. And a lot of the times too, some builders, and this was a bank requirement before we, had this partnership acquisition with Sumitomo, which I can talk about. The banks required this. The banks would say, okay, we'll give you the money to build this house, but you need to get a good qualified buyer in here with a deposit. And so that was a requirement. We have none of those requirements, our building company, because, and again, this is a good question. Is your builder financially viable? We're one of few builders after the acquisition with Sumitomo. I told you, Marco, we paid off all of our bank debt. We're one of few builders of our size. We have zero bank debt, which gives us a very strong balance sheet that allows us, first of all, to build with a lot more speed and a lot more economic ability, for pricing and for higher quality. It also allows us, which a lot of your clients are taking advantage of, we're able to pre-buy mortgages. We've qualified now, and not all builders will, for builder forward commitments, where we can commit to buy large tranches of money and pass that mortgage savings on to the buyers. So, we've closed several with Norada over the last few months, and your people are locking in because we're buying down the mortgages, averaging about 4.75%. And on a duplex or a quad, if you went to a normal mortgage bank, you're talking probably 2.5 to 3 points higher. So that's an important thing that a strong builder can also bring. They can sometimes bring their own in-house financing like we're doing. And that obviously, buying a duplex at 7.25 compared to 4.75% is the difference between negative cash flow and positive cash flow.
Yeah, that's a great rate, and that's a huge difference. I mean, whatever you did was fantastic. I don't know how many builders actually do that or can do that, but that's
Yeah.
very attractive from a financing perspective. And I assume those are 30-year fixed rate mortgages. Like,
We have a 30-year fixed. We also
yeah,
have a 30-year AM 10-year fixed. So no short term. We don't do any like 2 or 3 year adjustables, but we have a 10-year fixed and a 30-year fixed. But both are 30-year AM.
wow, impressive.
Yeah.
Um, so on the insurance side, I don't know if you want to talk about this. I know that Florida always has concerns and issues in and out, up and down with insurance. Sometimes, insurance options are not available. Sometimes they are. Sometimes they get pretty aggressive and expensive. What is going on with insurance?
Yeah,
It's crazy.
and again, insurance is such. Remember, insurance companies are about risk. So certain properties they analyze to have more risk and others to have less risk. And that's based what your premium is going to be. The bottom line here is, and this is something you have to understand about Florida, if you buy a house that's 2004 or newer, the odds of your insurance rate being much cheaper are very high. And the reason is 2004, Hurricane Charlie hit Punta Gorda area, devastated it. My father's cousin was living there. And the government here changed the rules. They said, that's it. No more building at 2 or 3 feet above sea level. You got to build at 13, 14 feet above sea level. So you got to bring in a lot of dirt, which we grumbled about. But glad we did after how well we did through the last hurricane. And then stronger structural design, stronger fasteners. And it's worked. That last big hurricane that went through Southwest Florida, we were building both in Fort Myers and Punta Gorda. You have clients with properties there. The eye of the storm, which was a oddly strong storm, went right over. We had almost no damage. The only damage we had out of 278 projects there, we had 4 houses where the freestanding walls had been put up, but not the roof tied on, so they fell over in the wind. But we had no flooding. And so when you perform like that through storms and such, you see the stuff on the news, the devastation. It's normally properties that were built because the worst thing for hurricanes is flooding. And when they were built at 2 feet above sea level, that's the problem. And so, so for example, where you and I met for coffee, my house is not far away. I'm one off the ocean here, small
Mhm.
barrier island, 10 houses wide. My house would be 3 times the size of like a few doors down, a little 1960 house, block home, and their insurance is 7 times the amount of mine. Why?
Wow.
Because mine was built in 2004 and theirs was built in 1957. It's just an old small block home. So that they see it as more of a risk. And so that's the thing with insurance. Right now, the insurance carrier we use actually has dropped rates some since the beginning of the year because we've performed so well. And that's a benefit of new construction. You have to go to today's higher standards. The insurance companies see that as less of a risk. And so that is a huge plus for your cash flow. And I own older homes. The insurance is higher, and I just do it into my numbers. But a nice thing if you're buying new construction is all of these rumors you hear. First of all, I can't get insurance, or second of all, the insurance is expensive in Florida. When you look at the real numbers, it's just not true.
I'm thinking I could probably create an entire podcast episode on the topic of new construction rental properties versus newly refurbished existing inventory rental properties. And I don't want to maybe deep dive into that today. That's another topic and probably for another day. But is this something you want to touch on? I mean, you used to be heavily into the newly refurbished resale inventory space, and then you transitioned to new construction, which I happen to like.
Yeah,
Um, but I always believe that there are pros and cons to both.
absolutely.
But if we look at it within the context of Florida, and maybe even within the markets that you're involved in, how would you compare or contrast newly refurbished homes versus new construction homes?
Yeah, well, and so remember, I'm going to give everyone a free copy of the new book, The Passive Income Playbook. This is my 25-year journey going from bulk refurbished to new construction. And a lot of that's in here, Marco. But let me say this in Florida, especially, let's focus on Florida. I can't talk
Yeah, yeah. We'll keep the
national.
context as Florida.
When we went from and we did a lot of, and I own older homes refurbished. However, what I saw was this: my average tenancy on the older refurbished homes was about a year. My average tenancy, and this is few thousand properties versus a few thousand properties when I give these comparisons. My average tenancy on the old refurbished, a little over a year. Average tenancy time on a new construction, a little over 3 years. That was really interesting for me. Now that I'm able to build to my specifications, where it's aesthetically pleasing, but also more durable, right from scratch without surprises, my turn costs went down about 70%. That was a big thing for us. Insurance, again, if we're trying to cash flow properties and now we're getting in at a higher price point, we got to really be able to be smart on our numbers, not only interest rates on loans, but where's insurance at? Like I just explained, my insurance was lower. I also found that I could build in a little better areas. My philosophy now, Marco, and it used to be different, but I'd like for all the properties I own, I'll walk down the street at 8 o'clock on a Friday night without any concern. And that's not for everyone, but that's just something I had. And with the new construction, I could find these better areas to build where I could make the numbers work. And then for us, we wanted to scale. We worked with you for years. We could never provide the amount of properties for ourselves or our investors had we gone the old refurbished model. Mm-hmm. You're competing with other people. There's always surprises. You can't go to scale on supplies and on bigger subcontractors. So for scalability, we could do that. And a lot of people, are looking for that longer term buy and hold with more ease. And I just found the new construction, you just have to be less involved. And a lot of our investors are like, I want to be less involved. I want benefit. Believe me, I want to, hold long term and create generational wealth, but I want to be involved less. And the new construction allows them to be involved less.
I don't know how much truth there is in this. I don't want to call it a myth, but so often I hear, and I mean, I've seen numbers too, but so often I hear that newly refurbished homes in existing mature neighborhoods have better cap rates and cash flow better dollar for dollar compared to new construction homes that are typically more quote unquote expensive on a per square foot basis. Mm-hmm. So, I mean, I've seen that to be true, but I haven't done 100 side by side comparisons. Is there, how much truth is there in that?
I think there's absolutely some truth to it. From what I've seen, and again, I don't have exact stats, but remember, I did a few thousand of the refurbished. Now we've built almost 10,000 new construction units. And what I've seen is, yes, off the bat, fundamentally, the older refurbished homes can have that higher amount. But things start to change around year 3. And if you're looking, I call it the 3-year curse. And again, remember, I own older homes too. It just seemed no matter what, Marco, I did, 1955 home, I did new roof, new heating and cooling, new plumbing, updated kitchens, electric baths. By year 3, I just know I need to budget for higher maintenance and repairs. It's just what happened. And with the new construction now being a decade in, we didn't see that 3-year lever up with that. Now, it could be, again, because we built it from scratch. It's a different building integrity. But that's what I saw. So I do think the older refurbished homes can get you off on a quicker thing, but you need to, I look out more longer term. What's going to happen year 3, 4, 5, 6, 7? What's going to have better resaleability? They're both a solid option to build wealth for you. But which one will have more involvement? Which one will go the steadier pace? For me, that's a decision. And again, both ways can get you there. I haven't really done a rehab. I hung up my shoes completely about 8 years ago. That's how committed I was to this new direction.
Okay, interesting. Okay, well, that's a good segue to talk a little bit about the type of product you're building right now. What type of product and where you're building it. I know you're doing single family and duplex. I'm not sure how much you're doing in terms of tri or fourplex, but kind of break down what it is you're building as far as inventory.
Yeah, that's our menu: single family, duplex, and quads. And I think that's an important part. A lot of people who are doing build to rent, building new construction rentals, only do single family, and we saw that as a big disservice. I mean, in the fixer-upper world, I was always looking for a great deal in a duplex or a triplex or a quad because I could get residential financing. The rental yields would usually go up. They had, you know, great value in growth times and then held value in bad times. And so I loved them, but they were rare. You couldn't, you've been out in the markets searching. It's rare to find duplexes and quads. And so we just made it part of our building recipe. And it's a great combination where a lot of our clients will buy a portfolio mixture of them because single family homes are known to have the best equity growth, but they can't really compete with the dollar for dollar rent returns on a quad. So we build a blend of all of them in all of our markets, and we go from basic single family homes. Again, less than 10% of all builds since the '08 meltdown are for homes 1,400 square feet or less. So we build a lot of starter homes just under that. We'll go up to 1,800 square feet on our single families, but we really want to be in that workforce housing starter home because a lot of the national home builders, they have no interest. They're large margin builders. They'll flat out tell you that. We're low margin builders. We do volume and we do low margin, but we'd make up for it in volume. And that's why we stick to these more workforce housing starter ones. And this is a need where, a lot of people would rather live in a nice neighborhood in half of a duplex when they can't afford a single family than to move into a large apartment complex, if that makes sense.
So, what did you say is the average size for a typical new construction single family home now? I know there was the time when people were wanting to build bigger and bigger homes, and they started calling them McMansions. But
Yeah,
what's
that's,
pretty?
our two probably most popular models are around 1350 and 1607. So you're talking starter homes, but when you set them up and build them, unlike those older homes, remember you go in an older home and it was almost like the mouse maze because there was just so
Yeah,
many walls. Open floor plans can do wonders, higher vaulted ceilings. So those 13 and a half square foot and the 1607 square foots are real popular models for us.
yeah, very cool. And what markets? Break down the markets again that you're building those in.
We build those in Jacksonville. We build those in Palm Coast. We build them in Ocala. We build them in Inverness. We build them in Citrus Springs. And then we're in about 7 markets in the greater Fort Myers area that we focus on doing all those, including Cape Coral, Punta Gorda,
Yeah,
Lehigh Acres.
yeah, yeah, yeah. I love all those areas. I've got some projects going on in the greater Fort Myers area right now. So,
Yeah.
well, technically it's in Cape Coral, just north of it, but yeah,
Area.
just huge growth going on there. It's just a beautiful, beautiful area.
Yep.
Okay, well, let's take a minute talk about your book. Tell us about your book
Well,
and
your
what you're
team
willing
is
to
in
do.
it. Some of the case studies for clients we've worked with, have obviously come from Narada, and it's really just our journey. It's our journey of how I started out doing bulk renovations on old homes and how I transitioned unexpectedly into the world of new construction and build to rent. And we also talk our whole thing of why did I go into real estate? I wanted to buy back my time and have a great family life. That was it, Marco. That was really my goal. Like we talked about traveling with our families last time we got together. And that's important to me. I want to be able to do that. But you know, my first model, honestly, of real estate, it almost bankrupted me, because I didn't know what I was doing. My second model, it made money when I was refurbishing a ton, but it bankrupted my time. And now this third model, where I hit stride about 10 years ago with the build to rent, the new construction, it's when I really set pace on building my wealth, buying back my time, and that's how we've made the most money for our investors with it. And so I had written a book before, and our publisher said, "You got to write a book on this with your wife." So I've been told it's an easy read. It's a nice journey to follow, and it's not just my journey. We weaved in a lot of our investors that you'll know a few of them, and the journey they took. And really, what we decided was we want to go to landlord friendly states that have high growth potential. And my decision at my older age now, I hit 50, this year, the big 50, is I've learned over the last 25 years, Marco, if I can give any advice, is if you're building a portfolio, my most productive wealth creative years have been when I've owned less property of better quality. That's it. So I'm not looking for hundreds of properties like I used to. I own a fraction of that now, but they're of such a better quality. And I'm making more cash flow and have more equity than I've ever had in my life. And I talk about this journey and kind of the principles and fundamentals and a couple of the guardrails that you might want to do while you're building. So, we'll make sure we get this out however you want to do it for the first, I don't know, whatever you think, 150 people. They contact their counselors. A lot of the counselors have handed this book out a lot for a lot of the people we're working with, but it really is just a personal journey of the last 25 years. And, I know you share some very similar bumps in the road as I did.
Yeah, for sure. Well, I appreciate the offer, and I'm sure a lot of people are very thrilled to hear about it. So yeah, I think the best thing to do is, if you're listening to this and you want a copy of the paperback version, Jim has been very generous in offering to mail a copy out to you. So just reach out to my team here. Just reach out to your investment counselor. And if you don't have an investment counselor, just contact us through the website. You can phone as well, but the form on the website is actually the fastest way because we can connect you with someone who's available right away. And just let them know that you were listening to this podcast episode and you're interested in a copy of Jim's great book. I have a copy sitting on my bookshelf right over there. But yeah, thank you, Jim. I appreciate you making that generous offer, and hopefully it'll help to educate and inspire people to continue down the road of building a portfolio in real estate and creating some financial freedom and hopefully some time freedom.
Yeah, absolutely. So, it's not an easy journey, but it's a worthwhile one. That's for sure.
It takes time and effort and certainly some energy. So, well, Jim, any final comments or takeaways? Otherwise, we're just going to wrap it up here today.
No, I think we had a great discussion. I'm still not sure what we call this podcast, but we got into some good ins and outs and side conversations. That's for sure.
I'll figure out a title. We'll make something work.
Sounds good.
Well, thanks, Jim. I appreciate you coming back on. I've been suffering with this cold, and I think I made it through most of this recording.
You did good. You did good. I didn't even notice.
Yeah, well, I appreciate it. All right, well, that's it for today. So again, thank you for listening. If you have any questions about real estate investing, just shoot them over to me and my team. If you haven't done so already, again, subscribe. It takes 3 seconds to click the button. Help us spread the word about the show. Visit us on iTunes, leave us a rating and review. And thanks for listening. We'll see you guys all on our next episode.